Dan, some people saying that this was also affected by quarter-end rebalancing and that next week we could see the dollar re-strengthen. What's your view on that?
Well, our view is that there's something a bit more lasting going on here, long-lasting, in the sense that the dollar, had been holding at these expensive levels for a while, started to weaken at early in March, and then squeezed a lot higher. We think that if anything, that the dollar may have been boosted by liquidity concerns ahead of the quarter end. So in fact, the quarter end might actually be a factor supporting the dollar rather than now weighing on it. And now, once we get past quarter end, liquidity conditions could improve further, which could see dollar weakness accelerating.
Daniel, can you construct a belief now? Can you construct a legitimate setup to speculate in foreign exchange?
Well, I think right now in FX market, as in many markets, the flows that are pushing exchange rates around are not really based on fundamental investment decisions or tactical strategies. They're really the flows that market participants have to do, and it's very hard to have any model that really predicts those with a lot of day-to-day success. So I think that's what we're struggling with in FX, but I think that's true in a lot of different markets as well.
Within FX, what's the bet right now? Is anybody long or short a certain way? Is there a belief out there that you would suggest has been taken to excess?
I think you have to go back to kind of the fundamental underlying positions of the market, which is that global investors over the last few years have accumulated a lot of dollar exposure, a lot of dollar risk. That's because U.S. yields were attractive. That's because yields were negative or very low in their home countries. So we've seen a lot of investment flows coming into the U.S., not hedged, a lot of exposure to the dollar. And as those rate differentials collapse and markets get more uncertain and the reason for being in those positions starts to go away, then the dollar is quite vulnerable. And some of that vulnerability has been masked because of the liquidity squeeze we talked about. But as the liquidity squeeze abates, that vulnerability shows through.
This is the challenge, Dan, right now for everyone in foreign exchange, trying to work out what has moved on the back of a technical dislocation, the illiquidity, the dollar demand of the last couple of weeks, and what has moved on the fundamentals that you speak to, the big move in rate differentials that we've had. We saw this play out in sterling on cable, the pound against the US dollar in a big, big way. 114 handle not so long ago, now 122 all over again. Do you still see some big dislocations in foreign exchange that need to close?
I think we're going to see moves still for the coming weeks that surprise us in terms of magnitude and direction and are very difficult to predict. I mean, that would be the situation we saw in the global financial crisis as well, where we saw these really what would have been normally staggering moves in foreign exchange rates, which we really almost couldn't explain. So that's not going to go away. I think in terms of long-term trend, medium-term trend, where we need to get to in the dollar is to something that's more sustainable in the long term, like more long-term equilibrium levels. And those are quite a bit higher in Euro USD, quite a bit lower in dollar yen, and that will probably happen. But the roadmap to getting there is not very smooth.
Dan, which pair are you looking at to determine the accuracy of your call that we probably will see more dollar weakness ahead? That perhaps the pressures were building up in a unique way in this quarter-end period.
I think dollar yen and euro dollar are the big ones. I mean, they're the biggest to watch always. But right now, particularly, the European investors that have accumulated a lot of dollar risk. Japanese investors have a lot of dollar risk. So if the dollar is going to have this broad move lower, it's going to show through in those exchange rates. And I think, as I mentioned earlier, dollar yen is probably has been the most impacted by liquidity pressures. So it's probably the one that has the most room to catch up to the downside in the coming weeks. But like I said, we're going to see moves that in both directions that surprise us day to day.
Well, we certainly see them this week as well. Dan Katsev there of BNP Paribas. Lisa, we've seen gains that typically you might associate with a year, a quarter maybe half a year, not a couple of days. Sterling is up against the US dollar this week by 5%. We have seen both a 114 handle on the pound against the US dollar and a 123 handle. 114 Monday, 123 earlier today. Just huge swings in foreign exchange in places that maybe you wouldn't expect.
The problem for me is how can we get a sustained rally if we don't have more stability? If you think about all of the sort of computer-based strategies that rely on traditional relationships between asset classes, how do they get back to some sort of normal if you have these wild swings in developed market currencies? I mean, this to me is a real conundrum.
Well, you see the big figure moves there in pound sterling, and that goes, John, to your work. And I mean, are you trying to tell us subtly that you're going to be bidding on AC Milan?
Oh my God! Seriously?
Did you make so much money?
I'm not sure what football clubs are worth this week, to be honest with you.
Well, yeah.
John, how do you feel about the fact that Tom always is sort of convinced that you're doing side bets?
Usually, I think it's because he's projecting Lisa, because he's up to something himself in the commercial breaks. But I take Lisa's point. How can you say the volatility is over when the VIX has a 68 handle this morning?
Yeah.
I mean, come on. Absolutely wild. Guys, we'll continue to discuss. Looking forward to the next hour. Some great guests coming up right here on Bloomberg Surveillance. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramowitz. This is Bloomberg Surveillance, with equity futures lower after a big week of gains. We are live on Bloomberg Radio.
Nothing's wrong. Who's gonna drive you home?
Imagine winning 10 grand.
Yes!
With Set for Life, you could win 10 grand every month for 30 years.
Get in! Amazing! Woo! Yes! Sweet!
Unbelievable.
Play Monday, and you could make every month amazing with Set for Life from the National Lottery. Your numbers make amazing happen. Prize may be capped. Rules, procedures, and game-specific rules apply. Players must be 16 or over.
This is a vital update about coronavirus. To help save lives, stay at home. Anyone can spread coronavirus. Only leave your home for the following reasons: to shop for basic necessities, to pick up medicine, to travel to work if you absolutely cannot work from home, to provide care to those who need it, or to exercise. Always stay 2 meters apart. Do not meet others outside your household, even friends and family. Stay home. Protect the NHS. Save lives.
It can be convincing when someone calls you pretending to be your bank. Especially when they say your money is at risk and you should transfer your funds into a safe account. Well, don't be fooled. At Lloyds Bank, we will never call and ask you to move your money into another account. We believe nothing is more important than our customers' trust. And together, we can keep your money safe. Lloyds Bank, by your side.
This week at Tesco, extra large Easter eggs are 2 for £8. And we've got an extra large choice on all your favourite brands, including Cadbury's, Reese's and Galaxy. A 2 for £8, the only thing that isn't extra large is the price. Tesco. Every little helps. Available in the majority of larger stores and online. Delivery charges may apply ends 31st of March.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Leave it to the New York Times to make the most intelligent pop music podcast out there.
Welcome to the New York Times Popcast.
On the Popcast, the Times music staff gets together for a weekly roundtable on the hottest topics in popular music. From award show autopsies and reactions to new releases to difficult-to-process scandals and emerging themes in the music landscape, hear distinguished music critics share their perspectives on the latest music news, songs, albums, and artists of note on the New York Times Popcast. Search and favorite Popcast to join the conversation.
It's TuneIn Sports on this day, March 27th, 1988. The Chicago Bulls and Atlanta Hawks match up in the Georgia Dome in Atlanta. Now, it draws a crowd of 62,046, the largest in any game in the NBA history. And the Bulls win 89-74.
But there's no question the spotlight today will focus on Dominique. Given what happened last week, I would think there's some incentive for Dominique
to listen to conversations breaking down the moments just like this. Click on Sports to be part of the discussion on TuneIn.
Leaders have struggled to agree on a strategy. Meanwhile, British Prime Minister Boris Johnson tweeted that he has tested positive for the coronavirus. Here in the U.S., the House votes on that $2 trillion rescue package today. Yesterday, the S&P and the Dow each jumped just over 6%. The Dow surged more than 1,300 points. The Nasdaq gained 5.6%. It was the third straight day of gains on Wall Street. Southwest Airlines CEO Gary Kelly says the carrier is losing big money on every flight, raising the risk of worker furloughs longer term. Kelly says he's never seen the plane so empty. Southwest has never laid off workers or cut pay and currently has no furlough plans, but Kelly said he could not promise that it wouldn't happen. Gina Cervetti, Bloomberg Radio.
Two people who are as fascinated by the markets as you are.
What's your sense of the competitive landscape in the cloud business?
Lisa Abramowitz.
People were talking about potential regulatory pressure.
And Paul Sweeney.
Are you seeing flows into ESG ETFs?
Bloomberg Markets.
What's your main conversation today with some of these corporate executives?
Weekday mornings at 10 Eastern.
They're spending a lot of money there.
On Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening. We have to get it right the first time.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
We are being taken out of our comfort zone by the coronavirus.
Dollar weakness is pretty much a good thing for a lot of the rest of the world.
Finance.
We are going to see a global demand contraction this year, most likely, for oil. The financial health of the business sector has deteriorated somewhat.
Investment.
Obviously, the value in high-vol stocks are going to continue to suffer.
It looks as though the bond market is talking itself into a recession here.
Bloomberg Surveillance with Tom Keene, Jonathan Farrell, and Lisa Abramowitz on Bloomberg Radio.
It has been an historic week in this New York City. Lisa Abramowitz, John Farrow, and Tom Keene, we welcome all of you to Bloomberg Surveillance. John, just let's get right to it before we get to these critical Fed interviews. This city is in crisis, and the real focus is how does that distribute across this nation in the coming weeks?
Yeah, and we've got to measure speed on the economic side, and that's the difficulty. Christopher Smart over at Barings, Lisa, tweeting the following in the last couple of hours. If markets look confused, it's because they are now measuring speed. How fast can we get the money out of the door and into the right hands? And how fast can the disease be contained and managed? It's hard to believe that we won't need more of everything before it's all over.
Yeah, and that's why I think there's so much focus on the Federal Reserve right now, because Congress is trying to pass this bill. They're expected to pass this $2 trillion stimulus package, support package by the end of today. But then by the time the checks actually get in the mail unclear, the Fed very much in the front and center is taking the lead, given the fact that they're going to expand their balance sheet by an estimated $4.5 trillion over the next few months, Tom.
The zeitgeist of the last 12 hours has been, this is not just the crisis of New York and what we saw up in Washington State a week ago. All of a sudden, John, there's a tangible focus on Atlanta and on Louisiana, which centers around the Bostic interview in 30 minutes and Mr. Kaplan coming up here in 2 minutes.
The whole of the country, Tom, and that's why I don't think you can have a second half call. You can't have a second half call without understanding how long this goes on for. We've got no idea about scope and duration still.
I mean, I'm looking out, Lisa, here at 3 zip codes. Good morning, Lisa. I see you over there. The NYPD helicopter dropping money has somehow disappeared. I thought I saw maybe Chairman Powell was throwing dollars out the window. But to this point, Lisa, this is so important. This is not about 3 zip codes of global Wall Street in New York.
No, and actually there was a great story in the Journal talking about who has actually filed for claims in the tri-state area, dominated by restaurant and bar workers, people who work in doctors' and dentists' office, dry cleaners, hair, nail salons. Most were women, 2/3, and 50% had a high school education or less, and many were under 35 years old.
It's really, really sad. And this print this week probably wasn't the peak of it. It's set to get a whole lot worse from here on the economic side, and we hope we can help them as soon as possible. This week, though, we have seen some signs of success on the Federal Reserve side. It's very early days, but a few signs that the Fed is having some success. Liquidity issues easing, a weaker dollar emerging, the primary market rebuilding. I think we've got to be careful, really careful, not to equate addressing some of the technical issues with sounding the all clear. There are some messy fundamentals to work through, and we can talk about them right now with a Fed official sitting down with Bloomberg's Michael McKee on Bloomberg Radio.
Thank you very much, and we would like to welcome Robert Kaplan to Bloomberg Television and Radio Worldwide. Thank you for joining us this morning. Obviously, only one topic.
Good to be here, Mike.
everybody's minds. The House expected to pass the fiscal stimulus bill this morning, and then I guess you'll be in business. But what business is that going to be? The Treasury could give you as much as $454 billion from this bill, which could leverage up to $4.5 trillion. Even for an old Goldman Sachs guy like you, that seems like a lot of money.
Yeah, I mean, the key to the proposal from the Fed point of view is there's a number of special purpose vehicles that are being created to implement these programs to buy assets from commercial paper to asset-backed securities to corporate bonds to municipal commercial paper. And so each of these special purpose vehicles requires approximately $10 billion to seed. And so the money from the bill will be used to seed these various programs that we've already announced.
The bill also suggests 2 new lending programs from the Fed, one for companies and one for the small business or the Main Street lending program that you guys talked about. What's the difference between the two? What is the Main Street program?
Well, it's the details are still being worked out, but the long and the short of it is we would help lend to small businesses, but we would do it most likely through commercial banks, but we will provide credit support to those banks so that they can step forward and make loans that are appropriate, but they can do it with confidence that they have credit support. That program is still being developed, and we're still working on the details of that.
Well, still being developed, the need is immediate. How soon do you think you can start getting cash to companies?
I would think very quickly. I've been careful to avoid setting an exact timetable, but you can be sure that we're working furiously here at the Fed to put the team, to have the teams in place and work out the details and get those programs ready, and you can have confidence that we will do that.
You're also going to have the ability to lend to states and cities. Give me an idea of how that would work.
Well, primarily, we've already announced that we will be buying through another special purpose vehicle the commercial paper of cities and states, municipalities, and that program is already well underway in terms of being formed, and it's going to be primarily through the purchase of commercial paper that's issued.
Some of this lending seems to put monetary policy squarely in the fiscal camp. How do you feel about that?
In this environment, it's necessary in that while it's unusual and a number of these authorities are unprecedented, I think it's critical that we adapt to the reality on the ground and we adapt to the challenge, and that's what we're doing. So I think it's in this situation, it's quite appropriate.
Can you get out of this when it's all over?
Yes. I mean, we'll obviously have to work on how to do all that in an appropriate way. But yes, I believe that we will. Everybody understands, or the country understands, this is an unusual time, and the reason we're implementing these programs is these either municipalities or businesses or other entities don't have cash flow because we've asked them to shut down. Once they're up and running again and they have their own cash flow, we'll be able to, I would think, withdraw from some of these programs. But in the void, we want to make sure that these small businesses, larger businesses, medium-sized businesses, and municipalities continue to function. And I think that's critical as we do the things we need to do to social distance and quarantine in some cases in order to defeat this virus.
A trillion here, a trillion there, to paraphrase Everett Dirksen. You start to talk about real money.
You might have said $1 billion at the time, but yes.
When you look at that kind of real money going into the economy, do you worry about inflation?
Right now I would call what we're doing under the category of quote-unquote relief, meaning this is intended to keep all the bills, including including the fiscal bills, are to keep individuals functioning and being able to pay their bills, small businesses functioning, municipalities functioning, larger businesses functioning, so that when the virus is defeated, we can walk, and then we can run, and then we can sprint out of this. In that regard, I don't know how inflationary it will be, because it's more relief than stimulus. I think a lot of the forces, unfortunately, on the other end, as we come out of this, might in fact be deflationary, and that we're likely to have a spike in the unemployment rate. We will work that down. We'll have more excess capacity. I think a number of those forces actually will be deflationary.
We're speaking with Robert Kaplan, the Dallas Fed Bank president, on Bloomberg Radio and television. One of your colleagues, speaking of unemployment, says we could see 30% and a 50% decline in GDP in the second quarter. What kind of numbers do you see?
So our forecast of the Dallas Fed is not on that scale, and that we think you'll see a substantial contraction in the second quarter. Our own estimates is it won't be that big, but it could be in the 20s. In our view, and just to point out, on an annualized basis, it will be in the 20s, and we can have some decline also, at least in the first part of the third quarter. And our own internal forecast here at the Dallas Fed is you could see the unemployment rate peak in the low to mid-teens, but we would expect that would quickly decline. We would hope to something like 7 or 8%. By the end of the year, and then would have to spend 2021 working that unemployment rate down. But we'll have an elevated level of unemployment for sure as we come out of this.
Well, do you see a V-shaped recovery, a U? Could this be a very long, slow recovery?
Listen, everything we're doing, and in addition, the fiscal response is all with the intention that once this virus is defeated, we will move forward as expeditiously and quickly and strongly as possible. The thing that I don't know, and we'll have to see as we go, is what will be the effect on small businesses. And I talked to lots of small businesses as well as larger businesses. You know, a lot of small businesses may come out of this either smaller. Some small businesses may conclude that they don't want to continue to operate out of this, given that their businesses were not as strong even going into this. And bigger businesses are going to have to assess how much demand do they have, what's the size of their business, and rescale and reconfigure what they're doing. And so, and then the consumer behavior. We're going to have to learn what consumer behavior is on the other side of this. I would think consumers, and we think at the Dallas Fed, consumers are liable to be more cautious, may well save more. You could understand why, and their spending habits may be a little bit different than they were, and they'll have a higher unemployment rate. So I think these are all things that it's a little too soon to gauge, but we're gonna climb out of this. It's just a question of how fast do we go again from walking to running to sprinting, and we're still trying to come to grips with that question.
Well, what are you seeing in Dallas, in the Dallas district? What are companies telling you there about their prospects?
So we're hearing a lot of things, but I think that we're hearing around the country. For small businesses, they're worried about survival. And that's probably true of even small and medium-sized businesses, where they've mapped a lot of scenarios, but never mapped a scenario where literally they were asked to shut down and revenue just stopped. And so there's great concern, particularly among small businesses, about whether they can make it to the other side, even with the loan assistance that we're talking about. For even bigger businesses, depending on what industry they're in, we're also having the same discussion, in that they're just trying to assess how long, how to manage their people, how to protect their people, but also how to manage their business during a period where their revenue is dramatically declined, and great concern. And in particular, which is what we're working on, will have availability of capital. The big other issue we deal with in Texas that most states are not is energy. We had, in addition to the coronavirus, an unprecedented energy shock that happened about 2 or 3 weeks ago with Saudi and Russia. So from the coronavirus, we were going to be globally oversupplied on energy to begin with, and the Russia-Saudi dispute and desire to pump even more makes this oversupply even worse. So we have a dramatic global oversupply issue for oil, which has dramatically hurt the price of oil. And so you're going to see lots of restructuring, some failures, and lots of challenges in the Permian Basin. And we think the Permian will actually shrink this year. We thought it would, before this happened, we thought it would grow more slowly. Now we actually think the production from the Permian Basin is likely to shrink. And the only reason you won't see it shrinking faster is some of these firms have forward commitments to sell their product. But as those lapse, you'll see a shrinkage across the industry.
The last question, as everybody looks to the Federal Reserve to sort of pull us out of this, what's your message to people who maybe saw Chairman Powell yesterday say we're probably in recession now?
Well, the message is we knew we were going to be in a recession. It's a self-mandated recession. It's a different kind of recession. Normally, recessions are things we avoid at all costs, or we avoid. This is a recession that we've induced. We needed to do this in order to fight this virus. Having said that, we were strong before we went into this, and we believe we've got a great chance to come out of this very strong. But everything, the message is everything the Federal Reserve is doing, and in addition, all the fiscal responses that you're seeing are with the intention of as we defeat the virus and we climb out of this situation, we do it as strong as possible and increase the probability that we're going to be we'll have a new normal as we come out of this, but we'll come out of this strong, and we'll get stronger as we end this year and go into next year.
Dallas Fed President Robert Kaplan, thank you so much for joining us this morning. Stay safe down there in Texas. We'll turn it back to you now.
Hey, Mike, great work as always. Michael McKee there with the Dallas Fed President, Robert Kaplan. Guys, we got a really nice sneak peek into the guessing game that's taking place with some of these Federal Reserve officials and the difficulty of trying to understand what the recovery looks like before knowing what the downturn looks like. What will the effect be on SMEs? Will they come out of it smaller, or will they fail altogether? How does big business assess demand coming out of this? Do they have to rescale smaller around weaker demand, and no idea how consumers respond? Could they become much more cautious? Could they save more? The speed of the recovery is going to look very different to the speed of the contraction we're experiencing right now.
Yeah, I'm struck by the idea of the Fed taking on this fiscal stimulus role, basically the Fed's Kaplan. To your point, John, saying that the speed of the recovery depends on the speed of the actions. Now, the Fed taking the front role with that. Interesting to hear the Fed's Kaplan saying that he does not see this as inflationary. He sees the forces as deflationary. They are providing a support to the economy. My question is, how do they extricate themselves from this?
Yeah, that came up halfway through the interview. What I did notice is the helicopter over Central Park stopped dropping money while Dr. Kaplan was speaking. But halfway through the interview, what I really noticed is what you just said, Lisa, to Mike's question of, okay, someday we're going to extricate ourselves from this. And that's a philosophical question removed from the horror of this virus and the trauma that we're seeing in New York and across this nation. Robert Kagan writing in the Washington Post this morning, Nick Burns writing the other day, who's now advising Vice President Biden. John, I really wonder socially, culturally, how the Fed extricates us from this free money and gets us back to what we do.
It's going to be very difficult, given that we expect a very sluggish economy coming out of this. Some insight for next week. This time next week, the payrolls report comes in America.
Yeah.
The estimate so far, negative 81K. So a negative print is what people are looking for at the moment. No surprise to many of you, I'm sure. But the payrolls report is only a week away. We'll talk about that in just a moment. Let's get you some news, some headlines worldwide from New York. Let's say good morning to John Tucker. Good morning, John.
Yeah, Jonathan, the coronavirus has hit 10 Downing Street. UK Prime Minister Boris Johnson testing positive for COVID-19. He made the announcement through a video posted on Twitter.
I've developed mild symptoms of the coronavirus, that's to say a temperature and a persistent cough.
The government says Johnson is self-isolating in his offices. The House expected to approve a $2 trillion package today aimed at blunting the economic damage caused by COVID-19 and the mass closures around the nation. President Trump says he'll sign the bill immediately into law. The legislation includes direct payments to most Americans, enhanced unemployment benefits, assistance for small businesses, and $100 billion in assistance for U.S. hospitals and healthcare systems. The mayor of New Orleans says throngs of revelers may have brought the coronavirus during Mardi Gras celebrations. Mayor Latoya Cantrell says she might have canceled it this year if signals from the federal leaders about the danger posed by COVID-19 had been louder at the time.
If red flags were given, I would say at the federal level, leadership matters. And so while I was the first in the state of Louisiana to stop social gatherings, I had to cancel the St. Patrick's Day parade. You know, all hell broke loose when I did that, but it was necessary.
Well, the number of known coronavirus cases in Louisiana jumped to more than 2,300. Global news 24 hours a day on air and a quick take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm John Tucker, and this is Bloomberg. Jonathan.
John Tucker, thank you very much. The blame game is going to go on for a long time, unfortunately. Pleased to say that joining us on the economy is Carl Riccadonna, our chief economist at Bloomberg Economics here in the United States, out in New York City. Carl, we've heard from the Federal Reserve official Robert Kaplan, and in just a moment we'll hear from Raphael Bostic on this program as well. What do you want to hear from the Fed after the big moves we've seen in the last couple of weeks?
Well, I think two things are important, and good morning, Jonathan. Thanks for inviting me on. I think that two things are important. So one, we have to have a better understanding of the trajectory the Fed is expecting coming out of this crisis. And certainly it's early in the crisis, so it's hard to make those forecasts. But when we hear forecasts like what we heard from Jim Bullard earlier in the week about these massive dislocations in the economy and in the labor force in particular, then we hear Kaplan kind of dialing those back to some degree. That's going to really lay the context for how we should be thinking about the Fed reaction function. The other thing I hope I don't hear from the Fed is discussion about the inflation outlook, because we can't possibly understand what's happening to inflation when we don't have an understanding of what's happening to the real-time economic trajectory. Inflation is a lagging indicator, and in a crisis, you should just turn that dial off and focus on real-time metrics like GDP, like consumer spending, and like unemployment.
Well, it's really interesting, Carl, as we look at the inflation versus deflation, the Fed's Kaplan saying that he actually saw deflationary forces as being more prevalent on the other side of this. And I'm just wondering what it means for possible inflation to have a $9 trillion Federal Reserve balance sheet. Is this debt going to be structurally deflationary in a way that people are not accounting for?
I think it is going to be immensely deflationary. We saw that through QE1, QE2, and QE3 when the critics were saying the Fed had put the money printing presses into high gear and there would be hyperinflation throughout the economy. That obviously did not occur. Instead, because we had a sluggish economic recovery, then we had very little inflation as a result. This type of crisis that we're seeing now is going to have the exact same consequence, where we see a lot of spare capacity in the economy, a lot of spare labor capacity in particular. When you have labor spare capacity, you don't get inflation.
Okay, let's take the basic equation, a wise one. Carl Riccadonna, the C is going to get crushed, I is going to get crushed, and it's G to the rescue, whether it's a monetary G or a fiscal G. Is there any history that shows that G can narrow the gap?
Well, we can see, and it's going back quite a long time, but if we look to the late 1960s, G played government and the GDP identity played a significant role in contributing to growth. And we also saw that in the basically in the aftermath of the Great Depression heading into World War II. So I think G can play a significant role here. But what's going to be more important is that first variable you listed, consumer spending, is going to have to rebound to lift the economy out. Even before the crisis, there was very little growth in the economy outside of consumer spending. So we need to stabilize the labor market, which we're doing with the transfer payments and the expanded unemployment benefits, but we need to make sure that unemployment rate doesn't back up to an extremely damaging level.
And Lisa, this is critical that Mr. Riccadonna calls a transfer of payments. This isn't a stimulus, it's an income replacement program, as it should be.
Right, and so that's the reason why it's not necessarily going to be inflationary. Carl, I want to talk about just the functioning of the Federal Reserve as it essentially provides fiscal stimulus in an unprecedented manner. How are they going to partner with Wall Street? What have we learned in terms of whether they're trying to contract with BlackRock or whoever in order to sort of deploy all of this at a time when there still are staff positions that are not filled?
Sure. Well, I wouldn't even necessarily characterize this as a stimulus at this point in time. They are just stabilizing financial markets, and they're expanding far beyond the Treasury market. Now, my team's looking at reasonable estimates for what QE4, if that's what we'll call this round, is going to look like. We think it's going to be as big as the first 3 rounds of QE combined. So we're talking about a $3 trillion expansion of the Fed's balance sheet as they buy up all the treasuries they can find and also extend out into small business credit, investment grade credit, and municipal credit, commercial paper. And this is just the beginning. They can, Dr. Kaplan talked about the seeds. They can put much larger seed money in place and further expand these programs.
Well, Carl Riccadonna, thank you so much. And thank you to your team at Bloomberg Economics, Tom Orlick, and all of you for a real global reach in this historic week. John, we forget that it's Friday. You mentioned the jobs report next Friday, which in itself will be extraordinary after a Thursday claims report. I mean, we go on and on here. But to Carl's point, I have no understanding how we get consumption replacement with the anecdotal stories I'm hearing nationwide.
And no one has a clue, Tom, and no one's going to have any kind of clue whatsoever until we get our hands around the duration of this shutdown to try and mitigate a health crisis. And I don't think we've got any idea how long this goes on for.
I mean, John, I'm going to be honest. We're trying to get somebody in here to cut hair in her house, and they desperately want to do it because they need the money.
I've got a hairstyle I can recommend to you, Tom.
Can you actually recommend to me? Because my son, oh my God.
He wants a haircut.
Oh my gosh, yeah.
I'm thinking of getting my hair dyed. I'm getting my hair dyed. I'm going with surveillance red.
Ask Zeke if he wants the Pharaoh.
All right, I'll ask Zeke.
See what he says.
That's what I need, the Pharaoh.
From New York City this morning, good morning.
That's what
you are listening to Bloomberg Surveillance
I'll be a
Live
girl magnet.
on Bloomberg Radio.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong. Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
This is
Whatever job you're searching for, you can find it on LinkedIn.
first jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, lunch in Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
Coming soon, Ricochet, the new action film written by, directed and starring Euro Millions winner Timothy Barker, with music by Timothy Barker.
Tonight's Euro Millions jackpot is a massive £22 million. That's dream come true money. Euro Millions from the National Lottery. Your numbers make amazing happen. Play online or on the app. Estimated jackpot. Rules and procedures apply. Players must be 16 or over.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We are live on Bloomberg Radio alongside Elise Abramowitz and Tom Keene. I'm Jonathan Ferro with equity futures negative just 2% on the S&P 500. I say just because you are used to some huge swings in this market as we head towards the biggest weekly gain going back to the mid-70s and coming off the back of the biggest 3-day gains going all the way back to the 30s. Some of the swings have been absolutely wild. Let's take a moment now to get you some economic data. We can do that by crossing over to Vinny Dow Judice. Hey, Vinny.
Hello, John. Let's look at a little bit of history, a little bit of look ahead. Consumer spending February up 0.2%, relatively steady heading into the crisis. In the crisis, Bloomberg Economics says we'll probably see some decent March spending simply because people were stocking up. Personal income in February up 0.6%, again matching the prior month. Inflation data tied to this. Look, it bounces around. Bottom line, it remains generally below the Fed's target. 10 a.m. Wall Street time, University of Michigan Consumer Sentiment Index, look for a slump. I'm Vinny Dow Judice, Bloomberg Radio. Let's go back to New York.
Vinny Dow Judice, great work as always. We're spending a lot of time trying to get our hands around the economic data in America. It is so difficult to get clarity and visibility on the downturn. And without any knowledge of how much longer and how deeper the downturn will be, how do you gauge what the recovery will look like? I think that is really, really difficult. We'll continue to get some really difficult data points through next week. We get the payrolls report in the United States of America, and we'll do our best to unwrap some of these complex issues with you right here on Bloomberg Radio. We can do some of that right now. We can cross back over to Bloomberg's Michael McKee, who's sitting down with the Atlanta Fed President, Raphael Bostic, right here on Bloomberg Radio.
Well, thank you very much, and we would like to welcome the Atlanta Fed Bank President, Raphael Bostic, to Bloomberg Television and Radio worldwide. Thank you for joining us this morning. House expected to pass the fiscal stimulus bill, then you get lots of money from the Treasury, according to the bill. What is the plan? The Main Street lending program that you talked about, what is that going to be?
Well, first of all, good morning, Mike. It's good to be on with you, and good morning to everyone. Just to provide some context, coming out of this crisis, or coming into the crisis, what we saw was a lot of financial markets really starting to break down in terms of their funding. And so we announced a number of facilities that were going to be designed to help those markets function more smoothly. And a lot of the funding in the bill was really oriented towards providing the backstop so that we can do that in an appropriate way that meets with our authorities. The Main Street Lending Program is another one of these that has been designed to really try to help small businesses. As you know, many small businesses don't have an extended buffer to weather weeks of not having revenues, and so they're under a lot of stress. And so the way the program is conceived conceptually is to provide them with a bridge that allows them to really stay in business, keep their employees on board, and get us to the other side of the program, the other side of the crisis. This hasn't fully been worked out, and I've been on calls pretty much continuously for the last 2 days, trying to work through all the little details. There's a lot. As you know, this is quite unprecedented for the Federal Reserve to be trying to do this So we want to make sure we do this right in a way that doesn't lead to problems down the road, but also in a way that gets the money out as quickly as possible.
Well, how do you do that? Do people line up outside the Atlanta Fed with loan applications, or how's this going to work?
Well, the Fed doesn't typically do direct lending like that. My expectation is that this will work through the banking institutions that already have relationships with many of the businesses that are going to be needing support. So, we're already working with small businesses, with banks to address some of the small business constraints. We're encouraging them to think about modifying some loan terms, deferring requirements for principal and interest on those loans, extending those terms as well, all with the idea of trying to reduce the current time pressure that these businesses are facing. So we're going to do more with the banks, is my expectation, and I look forward to being able to announce this as soon as possible.
How soon do you think that is? I mean, the need is immediate. You walk down the street anywhere and you just see store after store shuttered.
Well, there's been a lot of focus on small businesses laying off a lot of their workers. But we're doing a lot of surveys here in the 6th District in the Southeast. And one thing that has been heartening is that many of these businesses have been saying, we're going to try to hold on as long as we can. We're not going to make any permanent decisions about our staff or our operations until we see the full range of support that's happened. I think the bill that is going through Congress right now is a good first step to do that. And we are going to work with this lending program to make sure that we get this out in time. We fully understand that time is of the essence here, and we're going to do all we can to make sure that we're not late with this support.
You'll also have the ability to lend more to states and cities. How does that work? Is this just the program that you've announced, or do you expand that?
Well, one thing I would say is we're going to wait and see. We're going to watch how these markets operate and see whether there are segments of the market that are not still working close to where they were under more normal times. And if we decide and determine that those segments are not working well, we'll look to set up other facilities to support them. For now, what we're seeing with the facilities that we've set up, though, is that many of the tensions and stresses that were rocking the market a couple weeks ago seem to be moving in the other direction, which is quite positive. But we're going to remain diligent to make sure that as time passes, if things do start to deteriorate again, we are going to be ready to step in and try to provide whatever support we can.
You mentioned that some of the businesses in your district are relatively optimistic, or at least want to try to be, about staying around. But I'm wondering about cities and states. You've got a couple of the poorer states in your district, and there's been a lot of concern about shrinking revenues because they're not collecting any taxes at this point. How bad is that situation?
Well, we don't know for sure right now, and I would say two things on this. One, I think that we're going to see are coming together in the public sector to make sure that every jurisdiction at the state and at the city level is able to get through this crisis and still be functioning at the end. But the second, which is another important thing, is that this is a public health crisis. This is actually quite different than some of the economic disruptions that we've seen in the past. And as a consequence, I think there's the possibility that once the public health crisis is gotten under control and we don't have that issue anymore, the economy may rebound actually quite robustly. And, the chair said yesterday on the news that the economy started in a good place. And I think that's exactly right. And that's something that we all should keep in mind. And the goal for almost all of these projects and programs is to try to make sure that when we get on the other side of this, the economy is as close to that place as possible, so that when recovery and health is not a major concern, the economy can really start kicking back on all the cylinders and running quite strongly. So my hope is that if we do the responsible things and take care of our public health problem, that the economy can rebound and some of the shortfalls that you're talking about wind up not being as deep as they could be.
Well, how bad do you think the shortfall could get? What does the Atlanta Fed see in terms of unemployment, in terms of GDP going forward?
So, it's interesting. I've talked to my macro forecasters, and what they tell me is that, in this environment where we've had basically an induced contraction, a sharp contraction, that forecasts are really difficult to do. And so we're definitely expecting GDP for the second quarter to be close to zero, or for the first quarter, close to zero. Second quarter, definitely negative. But then the third quarter, there's really sort of an open question as to how quickly we get the public health crisis, this coronavirus spread under control. And among my forecasters, there's debate about whether we'll start to see that early in the third quarter, middle of the third quarter, or the fourth quarter. So I think it can be pretty tough for the next month or so. But then a lot of the trajectory will depend on how we deal with the public health issue.
You have a background in housing. There's no money in the stimulus bill for mortgage forgiveness or rent delays or things like that. How do you think housing plays out here?
Well, it will depend. I would say that what we've seen through the Congress is a series of bills trying to address various aspects of the crisis and the economic downturn. The housing market is one where we're continuing to have conversations. I've gotten contacts from many in the property markets and the property industry, and they're telling me about their challenges. So we are working right now to try to understand those better and make sure that there isn't collateral damage in housing markets, such that either a bunch of companies go out of business, or two, a lot of people lose their homes. So we're going to try to make sure that as we get through this, the housing sector is not a repeat of what happened in the Great Recession.
In this stimulus bill, the fiscal stimulus bill, you're getting a lot more money, a lot more power from Congress, but they're also putting some restrictions on what you do, in terms of the corporate loan program and what companies are allowed to do. Does it bother you that the line between fiscal and monetary is getting quite blurred?
So I don't think so. Well, first of all, no, it doesn't bother me. And the thing to remember is that all of these facilities are being stood up under emergency authorities. And I think the important context to keep in mind here is that we're in an emergency. And when we're in an emergency, one of the lessons that we learned coming out of the Great Recession was act strong, act definitively, attack in a very aggressive way those parts of the market that are weak, to try to limit how deep or how negative things get. So it doesn't trouble me about this. We have these authorities, the Congress has given them to us, and we'll use them in emergency, and I have every confidence that we're going to apply them in a very responsible way.
Last question, as you stand up all of these authorities and get deeper into this, what unintended consequences do you foresee? What are you worried about down the road when we come out of this on the other side?
Well, I'll say in the short run, I'm worried about just my staff. We're working incredibly hard to stand these things up, and across the entire Federal Reserve System. So I want to make sure that we are doing this using all of our resources, and I'm spending a lot of my time right now just trying to keep an eye on people and make sure their frame of mind is positive. On the backside, I think that one thing I'll be looking for is a measure and a gauge of consumer confidence to see how consumers and households are thinking and feeling about the U.S. economy and their prospects, after this, because that will, as you know, play a very important role in shaping people's willingness to consume and spend and invest in themselves and in their businesses. So I'm going to keep an eye on that, and hopefully all the things that we're doing today will give people some confidence, and that confidence will carry through into the recovery period.
We can hope. Thank you very much. Atlanta Fed Bank President Raphael Bostic for joining us on Bloomberg Radio and Television Worldwide this morning. I'll send it back to you guys.
Michael McKee, thank you so much. Just extraordinary for Michael to line up Dr. Kaplan and Dr. Bostic here. And Lisa, was not really addressed directly there, but nevertheless, here are two Federal Reserve presidents, and their geographies are in the zeitgeist of what we see in New York. And indeed, I should say in Boston. We have to remember, Lisa, on a scatter dot chart I saw about 2 hours ago, Boston has really had a difficult 48 hours of an expansion of this virus.
Sky Store brings movies from the big screen straight to your TV screen. See what's new tonight.
Philip asked me to marry him. No, love doesn't end well. Let us prove you wrong.
Stay in for a spellbinding night with Maleficent, Mistress of Evil.
I consider Aurora my own.
Watch the latest movies straight from the cinema.
We'll do our best to protect you.
Disney's Maleficent, Mistress of Evil. Available now in Sky Store.
Stocks here, Tom. I mean, I think if you look, 35% decline in stocks, you get a 20% retracement or rebound, right? But history tells us over and over again, if you look at the 13 big waterfall declines since 1929, 9 of those 13 have retested or broken the low on an average 2 months later after that initial decline. So history tells us the deeper the decline, the higher the bounce, which we've got the last 3 days, and then the deeper the retest. Even on the 4 instances that didn't set fresh lows after 2 months later, 3 of those 4 at least retested the lows but didn't break them. The only instance that you can find going back decades and decades is the December 2018 instance where we had a true V bottom and bounce. So point is, I think you need to be a little cautious, a little defensive here on stocks. 2200 was the low on the S&P, so let it drift back down here, and then I think there's going to be some phenomenal buying opportunities on the equity side.
All right, so Daryl, if we do want to look out to the other side of this, what are some of the sectors you're suggesting to your Wells Fargo clients that maybe they think about to the extent they want to get back into the market or maybe put some new money to work?
Yeah, it's a great question, Paul. So right now, if we're favoring sectors, what we want to have is information technology, which again is up in quality, has some of the strongest balance sheets, some of the highest level of cash on balance sheet, fortress type balance sheets, and probably recovers. We do like comm services, communication services. We also like the consumer discretionary sector. And we think you can actually, from a value standpoint, start ticking away at financials here. You're getting the banks at really cheap price to book levels. Sorry.
So you're saying Microsoft's a consumer discretionary because they own Minecraft, right? Everybody, coast to coast with these shutdowns in the kids' home, they're all glued to Minecraft. So I guess Microsoft can be like, Procter & Gamble or something like that. Daryl, tell me about the financials. That seems to be the surveillance point of debate this week. We got some people saying run, and I believe you're saying no, you see some value within the banks.
Well, obviously, it was time to run prior to this, right? I mean, the financial or the KBW financial index is down 51% peak to trough. But, again, strongest they've been in decades from a capital and liquidity standpoint. You guys know that. If I can buy financials less than 1 times tangible book, which many of them today are trading at 0.6, 0.7 times book, you just don't get those opportunities very frequently, Tom. And when you do, history tells us 12, 24 months out, they're exceptional opportunities.
So, Daryl, we're going to see some really, really ugly economic numbers over the next several months. We got a taste of that with the jobless claims of, 3.28 million yesterday. How can any equity portfolio stack up against what's going to be some rising unemployment, just incredibly negative 2Q GDP prints? It just seems like the market is really going to be challenged over the next several months as it digests all this data.
I think you're right, Paul, and I think that's why we want to be a little bit patient and careful here, because, again, if you take that as phase 1, the initial draft down, phase 2 is often this long, elongated consolidation phase of test and retest, volatile up and down, right? So you have plenty of time to put capital to work in the equity markets. It's not going to get away from you to the upside. And then eventually phase 3, when the data improves, you start to see then you break out into the next bull market. It's interesting if you go back and look historically, economic recessions, again, going back to 1929, the average market bottoms 4 months before the recession ends, with an average recession being 13 months. So if you were to say we're 30 days into this recession, I don't know if this one's going to last 13 months. We actually think it may be shorter than that because of what happened and how we moved into it. But let's just say it's 4, 5, 6 months out, then you want to look for 4 months prior to that is when history tells you markets at the bottom.
This is I'm really glad you bring this up, Daryl. This is an incredibly important point. And I don't think it's ever said enough, particularly within the business media. The market's always looking out forward and as a discount mechanism as a general research statement, 6 months. Good morning, UMass Amherst, which is in Vanderbilt, which have a great heritage of researching this. Has that changed in the modern day? Does the market still look out about 6 months?
Yeah, it actually does. And I would actually argue it's extended, Tom. I mean, I think the market is almost trying to look out more like 9, 10, 11, maybe even approaching 12 months. So, but I just don't think it's realistic to think if we're in a bear market and everybody acknowledges, ourselves included, that we're in a recession. We don't know exactly how long and how deep yet, that it would be unrealistic to think a bear market lasts 30 days and a recession lasts 30 days, or it would certainly be unprecedented.
So, Darryl, give us your assessment on kind of what we've seen coming out of Washington. The Fed seems to have been pretty aggressive, pretty out in front. Looks like we're getting some strong movement with $2 trillion of stimulus. How do you think that's going to impact the economy?
Well, it will impact the economy. I mean, by any means, we've had 12 historic policy actions in the month of March. Each one unto itself would be a massive story. Paul and Tom. I mean, you could write about this. It will go down in the annals of history. I mean, certainly if you take the $2 trillion package that's going to get passed in the House today, that's about 10% of GDP, right? And if you were to add in everything the Fed either is doing or can do, the total stimulus accounts to close to 30% of GDP, which is nothing like we've ever seen before, Tom.
Are you brave enough to buy investment-grade bonds?
Yes, we like investment-grade bonds here. And again, with the Federal Reserve coming in and now beginning through their multiple programs of alphabet soup of not just buying investment-grade bonds, but also buying investment-grade bond ETFs and everything else, there's really good support. You now have what I call the adopted fixed income asset groups. And
listen to you. What is that? What is that?
Well, so think about the adopted groups are places where the Federal Reserve is actively buying. So municipal bond market, commercial paper, investment-grade corporate bonds, asset-backed securities. The orphan groups are places where they're not. High yield, non-agency, CMBS, RMBS, CLO.
School tuitions. They're not covering that. Okay, Daryl Cronk, thank you so much with Wells Fargo. That was a great walkthrough, folks, of what to do with portfolio. Just one opinion, but very, very valuable. Always valuable with our news in New York City. Here's John Tucker.
And Tom, Boris Johnson has tested positive for the coronavirus. The UK Prime Minister in a Twitter video says he's not in any discomfort and, in fact, working from home.
Be in no doubt that I can continue, thanks to the wizardry of modern technology, to communicate with all my top team to lead the national fight back against coronavirus.
Johnson said he is self-isolating and urged other citizens to do the same. Also, the UK health minister has tested positive for COVID-19. Spain reporting its deadliest day yet of the coronavirus outbreak. Spain's health ministry reported today another 769 deaths, lifting the total number of fatalities to over 4,800. Prime Minister Pedro Sanchez convened an emergency cabinet meeting to try to chart a way out of the crisis rapidly engulfing his nation. A Navy medical ship, the Comfort, expected to be sent off from Virginia by President Trump tomorrow and arrive in New York on Monday.
I told Governor Cuomo that the ship will be arriving at New York Harbor on Monday. I think I'm going to go out and I'll kiss it goodbye.
Los Angeles eagerly awaiting the arrival today of the U.S. Navy medical ship Mercy. China is said to be willing to offer help to the U.S. in controlling the coronavirus. According to the Xinhua news agency, Chinese President Xi Jinping told his counterpart in a phone call that relations between China and the U.S. are at an important juncture and cooperation is the only right choice. Global News 24 hours a day on the air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm John Tucker. This is Bloomberg, Tom and Paul.
John, thanks so much. And I know, as John mentions, the ships coming into New York and L.A., Admiral James Stavridis, is hugely constructive on the arrival of those ships. He feels they can be not only a morale boost to the beleaguered medical corps, but can provide some substantial services as well. Yep. Paul, in the time we've got here, the good news is Minecraft is so dominant, the kids are off all the rest of the garbage, including the streaming. Is this crisis good for Disney Plus and the others?
I don't know. I think there's certainly going to be a lot of sampling here. There's usage of media is actually up. We actually even see ratings of the network television actually up over the last couple of weeks. So as people are stuck at home, they are consuming more and more media, including Disney Plus. But I don't think I'm sure they all just want to get back to normal routines. But to the extent that the people they have more time now to sample a lot of these new streaming services.
There's so much product out there. I find it absolutely extraordinary, and particularly to observe what children look at is a little different than if you and I had a crisis like this in our
That's
youth.
Right. That's right. So, it's interesting to see. And it would be interesting to see. I know a lot of the media companies are starting to talk about, will this pandemic and this crisis, will it change consumer behavior as it relates to how people work and play and consume media and things like that? And nobody has a clue, but they're really starting to ask those questions here.
I was talking to Al from New Jersey. I mean, Paul, I could get used to this.
I think you might have created a little bit of a monster here. So with the technology, so
I think that it's we should take the time here. We're going to continue with you through the hour and through the morning as well. But to the Bloomberg surveillance team in London, in New York, and truly across this nation, we just need to say thank you. We make it look easy here with the mics and all that, but there's been huge effort, both on television and radio, to make this happen. They have these computer boxes, Paul, that are just extraordinary. Tom, press this button.
Exactly.
Then press that button. No,
and
Tom,
the sound comes out.
Don't press that button. That's really what it comes down to. Please stay with us, folks. We will continue. This is Bloomberg. Good morning.
This is a Bloomberg Pursuits look at luxury. Designer face masks have been around for at least a decade, a niche market catering to the chronically sick, along with frequenters of Burning Man and fashionistas in Beijing. Now, amid the coronavirus pandemic, these reusable $70 luxury masks are a coveted accessory for wealthy people around the globe. Gwyneth Paltrow posted an Instagram wearing a black mask from Swedish company Arinim. But critics see them as a new symbol of inequality at a time when protective equipment for medical workers is in woefully short supply. Also in short supply, dogs and cats. Joining toilet paper and hand sanitizer and bottled water, there's suddenly a run on adopted and fostered pets in New York City. Applications have surged as much as tenfold in the past 2 weeks. Ordered to shelter in place at home and both a little bored and a lot anxious, New Yorkers apparently see the four-legged friends as a way to calm frayed nerves. Visit BloombergPursuits.com for more. I'm Andrew O'Day, Bloomberg Radio.
Message and data rate may apply. T&C and privacy terms can be found at Babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
The happy family of 3 were about to welcome a new member. That's right, they were finally getting a dog.
Buy on eBay, dog bed from £12.
First, they had to make a few adjustments.
Sell white rug.
And prepare the kids for the reality of owning a pet.
Buy biodegradable poop bags from under £6.
Everyone instantly fell in love with Little Rocky. Unfortunately, Little Rocky fell in love with a cushion. Buy, sell, eBay.
Delivery costs may apply.
This is a vital update about coronavirus. To help save lives, stay at home. Anyone can spread coronavirus. Only leave your home for the following reasons: to shop for basic necessities, to pick up medicine, to travel to work if you absolutely cannot work from home, to provide care to those who need it, or to exercise. Always stay 2 meters apart. Do not meet others outside your household, even friends and family. Stay home. Protect the NHS. Save lives.
At Dell, when we created the new XPS 13 laptop, we treated every little piece like it was everything. We crafted every part as if it were the most important thing we'd ever made. The result? Something you'll have to see to believe. Pity this is radio. See the new award-winning Dell XPS 13 at dell.co.uk. Every little thing is everything.
And breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stocks are dropping as investors assess the pandemic's impact on the economy, with large areas of the country virtually locked down to slow the spread of the virus. Treasuries are climbing. We check the markets every 15 minutes throughout the trading day on Bloomberg. The S&P 500 down 4.1% on 108 points to 2521. Dow Jones Industrial average down 4.8% or 1,080 points at 21,473. And the NASDAQ is down 3.9% or 302 points at 7494. 10-year Treasury up 1 3/32, yield 0.73%. The yield on the 2-year 0.27%. NYMEX crude oil is down 4 1/4% on 97 cents at $21.63 a barrel. COMEX gold is down 0.7% or $11 to $16.4860 an ounce. The euro 1.0970 against the dollar. The yen is at 108.74. Federal Reserve Bank of Dallas President Robert Kaplan talked the federal stimulus plan and the outlook for the U.S. economy in an interview heard earlier on Bloomberg Radio.
All the bills, including the fiscal bills, are to keep individuals functioning and being able to pay their bills, small businesses functioning, municipalities functioning, larger businesses functioning, so that when the virus is defeated, we can walk and then we can run and then we can sprint out of this.
And Kaplan says we will see a substantial contraction in the second quarter, but says we will come out of this stronger and get stronger into next year. And that's a Bloomberg Business Flash. Tom and Paul.
Karen, thanks so much. Greatly appreciated. Paul, I want you to bring in our next guest here as we confront this continuing crisis. We do this on a beautiful Friday, but beneath the beauty of this island of Manhattan and the 5 boroughs, there's a lot going on.
Absolutely, Tom. Let's we want to get down into the weeds here of this virus. Dr. Kritika Kopali, infectious disease physician and fellow at Johns Hopkins Center for Health Security. Absolutely no better place to go and no better person to chat with here. So, Doctor, give us a sense of kind of where we are with the virus right now. Is the U.S. doing what it needs to do to slow the growth here? Because the numbers just aren't showing it yet.
Yeah, that's a really great question. And so, as you know, yesterday the U.S. overtook China with having the greatest number of cases reported, with over 86,000 cases as of this morning. And, that was not unexpected at all, given what we were looking at even from a few months ago. In terms of where the U.S. is right now, we're still in dire needs. We need diagnostics still. We need to still ramp up testing. We need PPE for our frontline workers. And so there's still a lot of things that we need to have done.
So, Doctor, there's been some discussion, namely from the president, about trying to balance the get back to work to save the economy versus continuing the shutdown to slow the growth of the virus. How do you think we should balance that as a country?
Yeah, so, I think we really need to let the numbers and what's going on dictate what we do in terms of getting back to work and reopening things, because what's going to happen is if we open things too soon, we're just going to have a resurgence in the number of cases. And while I understand the importance of having our economy up and going again, we won't have a functional economy if we don't have healthy people who are alive to interact in the economy. And so I really do think we need to let our scientists and our modelers look at what's going on and really help advise as to what we do.
Kritika, you are, leading here. I'm thinking of the gentleman, the name escapes me right now, a gentleman in England who has done so much in Africa and really in the combat warfare against viruses, Ebola and all the others as well. How do you transfer the lessons learned from the continent of Africa over to Brooklyn, New York?
Yeah, that's something I actually have been saying for a couple of weeks now, is that we really need to look at what our colleagues in Africa and other resource-limited countries have done as we try and scale up our response here. And I think, these are areas where they have been used to dealing with infectious diseases outbreaks. They're used to having limited resources, and they have been, in some cases, very successful to combating these things. So we need...
Kritika, this is so important. Right now the buzz this morning is some guy with brilliant technology has figured out where the horde of college kids on the beach in Fort Lauderdale, and then they distributed and could follow their cell phones across, half of America or whatever. You've dealt with people that are in dire straits in controlling a virus. How do we transfer their seriousness and their adultness over to a bunch of people having a happy hour on a beach in Florida?
Yeah, it's really hard. Again, I think it's, taking people who have the expertise that have worked in places like Africa and other resource-limited countries, and working to advise our governments and our administration and the people who are on the ground right now, rather than reinventing the wheel. And I see a lot of people trying to reinvent the wheel because they haven't dealt with this before. And I think they really need to leverage the experience we have with people who've been on the forefront of these types of outbreaks in the past.
Dr. Kritika Kapali, thank you so much for joining us. The smart discussion, Tom, which we certainly need here. Dr. Kapali is infectious disease physician and fellow at Johns Hopkins Center for Health Security, and that seems pretty appropriate right now.
Can I do a surveillance shout out, Paul, to Johns Hopkins, which has done the definitive graphical presentation moment by moment. It all gets sorted out. There's umpteen programs out there, all hugely competent, but there just seems to always be one in a given crisis that gets the visuals correct. And it's been the Johns Hopkins University. They've absolutely nailed. How do you count the deaths? How do you count the cases? And all of the stuff you and I see, John Burns Murdoch over at the FT, the great work the Katzes are doing at the New York Times, a spectacular Bloomberg graphic on the hospitals in New York. All of that centers back to the data capture that's been done down in Baltimore at Johns Hopkins.
Yeah, absolutely. And I guess we should expect nothing less, Tom. Johns Hopkins has been on the forefront of this for generations, it seems, and they're the source for a lot of the data that Bloomberg News uses in terms of the number of cases and fatalities, and they are our go-to, absolutely authoritative source.
Should we disclaim that a member of Bloomberg employment possibly darkened the door and captured a piece of parchment from Johns Hopkins a few years ago?
I think that's right.
Folks, Mr. Bloomberg has been more than generous to his alma mater, Johns Hopkins, but they've truly been industry leading here in the data distribution. Paul Sweeney and Lisa Bramwitz, they'll drive forward the conversation through the morning after this most historic week. Pro tip, next week will be
Family of 3 were about to welcome a new member. That's right, they were finally getting a dog.
Buy on eBay, dog bed from £12.
First, they had to make a few adjustments.
Sell white rug.
And prepare the kids for the reality of owning a pet.
Buy biodegradable poop bags from under £6.
Everyone instantly fell in love with little Rocky. Unfortunately, little Rocky fell in love with a cushion. Buy, sell, eBay.
Delivery costs may apply.
I love dogs and cats. Short-haired, long-haired. I love you all, don't I, Bianca? But I don't love cat hair all over my carpet, which is why I got a job testing vacuum cleaners in the Witch Test Lab. We rub an exact amount of real pet hair into an exact area of real carpet to see which vacuum cleaners really suck it up. And the vacuums that perform best are the only ones we recommend for your home. Witch.co.uk. Our tests find you the best.
Listen to Raj go. Polyrhythm, paradiddle. A drum solo so epic, he nearly forgot his mum's birthday back in Delhi. Good thing Raj has Western Union on his phone and can send money quickly online. Download the app today. This service is provided by Western Union. FX gains apply.
It's TuneIn Sports on this day, March 27th, 1988. The Chicago Bulls and Atlanta Hawks match up in the Georgia Dome in Atlanta. Now, it draws a crowd of 62,046, the largest in any game in the NBA history. And the Bulls win 89-74.
Well, there's no question the spotlight today will focus on Dominique. Given what happened last week, I would think there's some incentive for Dominique.
To listen to conversations breaking down the moments just like this, click on Sports to be part of the discussion on TuneIn.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Students that have been trained, educated, and given the business acumen to be a contributor to a company. The distinct mission is to develop great STEM scholars. The attributes I've always looked for in team members are heart, smarts, guts, and luck. So we want people with passion, intelligence, courage, and never discount luck. The student coming out of NJIT has experienced all of that.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
This is a Bloomberg Money Minute. Stocks fell at the open today as investors assess the pandemic's impact on the economy. The U.S. also overtook China for the most coronavirus cases worldwide. The House is gathered to vote on a $2 trillion economic rescue package. House Speaker Nancy Pelosi said the House was ready to pass the measure and send it on to the president for his signature. If no members objected, the House could pass the massive bill by a simple voice vote, but leaders were making sure that enough members would be on hand for a roll call vote if necessary. Cruise line stocks are falling after a late change to the stimulus package that would bar companies not incorporated in the U.S. from getting the aid that's moving through Congress. This is according to Dow Jones. Carnival, Royal Caribbean, Norwegian Cruise Line all operate out of Miami, but the companies are incorporated overseas. And Southwest Airlines CEO Gary Kelly says the carrier is losing big money on every flight, raising the risk of worker furloughs longer term. Gina Cervetti, Bloomberg Radio.
They don't just talk to the most important people.
Can you give us your broad sense of the main driver behind the latest weakness?
They talk with the most interesting people.
When you talk to your clients, are they taking this seriously?
Lisa Abramowitz.
What's going to be the main driver of growth?
Paul Sweeney.
What did you take away from those Amazon numbers last night?
Bloomberg Markets.
Is it as ominous this time around?
Weekday mornings at 10 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney.
Is there any bank right now in the U.S. that you think is a buy?
Do you think Chairman Powell has lost the market?
Jeff Bezos is no dope. What's the big ka-ching?
The big question, I think, for investors is free cash flow.
Breaking market news and insight from Bloomberg experts.
The U.S. tariffs actually hurt both China and the U.S.
Large strategics are looking to either buy or invest in innovation.
Soybeans and corn have been basically at or below the cost of production for about 4 or 5 years.
And what we see more bonds, more yield.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Coming up over the next 2 hours, the biggest rally since 1933. Was it just a dead cat bounce? Plus, we get the latest on coronavirus numbers as well as the outbreak and how much it's spreading in key metropolitan areas. Right now, though, let's head over to Charlie Pellet for a Bloomberg Business Flash. Charlie.
Hi, thank you very much, Lisa Abramowitz. Happy Friday, almost the weekend. We have got the Dow, the S&P, and NASDAQ halting a 3-day rally. Steep losses in the first half hour of trading here with the S&P down 91 points right now. That's a decline of 3.5%, 4.1% drop right now for the Dow, down 925 points, and NASDAQ lower now by 258 points. That is a drop of 3.3%. 10-year up 1 2/32. The yield now 0.73%. Gold is down 0.5%, 16.23 the ounce, and West Texas Intermediate crude lower by 4.9%, 21.50 for a barrel of WTI. Stocks selling off as investors assess the pandemic's impact on the economy, with large areas of the country virtually locked down to slow the spread of the virus. S&P opening lower after its fastest rally in 9 decades, sentiment being hit by news that America has now overtaken China for the most coronavirus cases worldwide. An exclusive interview today with the Atlanta Fed President Raphael Bostic. He talked about a number of topics with our Michael McKee, including an economic rebound.
This is a public health crisis. This is actually quite different than some of the economic disruptions that we've seen in the past. And as a consequence, I think there's the possibility that once the public health crisis is gotten under control and we don't have that issue anymore, the economy may rebound actually quite robustly.
Southwest Airlines says it's losing, quote, big money on every flight, raising the risk of worker furloughs in the longer term, despite billions of dollars in immediate aid from the U.S. government. Southwest, ticker LUV, down 5.8%. No love for the airline sector today. Delta plunging 6.2%. American Airlines Group down 8.1%. JetBlue among the airlines lower now by 8%. Again, recapping here, S&P down 92. That's a drop of 3.5%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We have read on the screen a risk-off day today after that 3-day rally, which is actually just an extraordinary bounce off the bottom, giving a little bit back today. Let's see where the action is in the equity markets. We do that with our good friend, Bloomberg Stocks editor, Dave Wilson. Dave, what are you looking at?
I tell you, there's just so much going on. I mean, you look at the travel-related shares, they're leading the way down. Still waiting for the House to deal with the economic rescue package that'll at least provide help for some of these companies. I think the airlines, for example, American talking about how it'll get $12 billion in assistance. We now know the cruise lines aren't eligible because of a provision in the bill that limits aid to companies with incorporation in the U.S. and Carnival, Royal Caribbean, Norwegian don't qualify. They're all among the worst performers on the day in the S&P 500. So, all the travel-related stocks, though, taking a hit. And we're also seeing, like, department stores and apparel makers really fall at this point. Nordstrom, for example, down 11% in early trading. You've got PVH, which is Calvin Klein and Tommy Hilfiger. That stock also down about 11% early on. So, similar declines across the group. Heck, even Lululemon down 5.5%, and their fourth quarter results, fiscal period, actually beat analyst average estimates in Bloomberg survey. They didn't want to talk about their fiscal year outlook, though, because the coronavirus is very much an issue for them and for a whole lot of other retailers that are losing customers because people just aren't going out.
Yeah, do you need $120 yoga pants if you're not going to yoga class? It's sort of a key question at this point. I am wondering, Dave, if you take a step back and you take a look at markets right now, we're looking at a Dow that's lower by more than 4% after the biggest rally since the 1930s, and the S&P S&P as well, lower by 3.5% after the biggest three-day rally since 1933. Was that a dead cat bounce? Is this sort of the reality hitting once again that the virus is spreading and that the economic damage is vast and unknowable?
Well, that is a big piece of it, no doubt. I mean, if you think about this week, there's been so much focus on the rescue plan and, throwing $2 trillion at the economy. I mean, that does get your attention. It gives people at least some hope. But now you're still dealing with the reality that it's going to be a while before that aid shows up. There's talk, I guess, about rather than doing a voice vote in the House, that everybody would have to come back and actually do a roll call vote, and that procedural issue may hold up any final approval. I mean, there are a lot of variables at this point. And in the meantime, companies are hurting. I mean, business isn't there. You look across industries, and that's what you see. I mean, oil heading back towards its lows of last week, which were 18-year lows, and energy stocks are the worst performers on the day in the S&P 500. So there's a lot to get through right now as you wait for any assistance to come down the line.
So, Dave, it seems like we're going to get just a whole host of really, really historically negative economic data, whether it's unemployment coming up or whether it's just a GDP, that GDP print for the second quarter. I don't think people can get low enough in their forecast. It seems like awful tough road for the equity markets in particular to kind of navigate over the next several months. That's just it. There's so many unknowns. And, to take it to the company level, I mean, you haven't seen earnings estimates come down all that much, even in the midst of all these increasingly negative economic forecasts for the second quarter. I mean, is it 9% that Bloomberg Intelligence is talking about? Is it 24% like Goldman Sachs? And, there was a number of 40%. And we're talking about second quarter declines in economic activity there, and you figure there would have to be a carryover to earnings, and it would really start in terms of the first quarter results that we're going to be getting in about 3 weeks or so. At least that's when they'll start. So, I mean, there is a lot of pain to come here, and it's not all reflected in the forecast, at least at the company level. I mean, analysts have been bringing down their broader earnings forecast for the S&P 500, but, as far as company-specific kind of projections, just not there yet because there are so many unknowns.
There was a University of Chicago academic paper that was put out yesterday. I have fantastic evenings, just to let you know, as I'm sequestered here in my apartment. But it was looking at the expected decline in dividend payments. I know you've done a lot of work, Dave, on the decline in stock buybacks, which has been a huge technical underpinning of the market. But this particular study was looking at how their forecast for the annual decline in dividends is down 28% in the U.S. versus 22% in the EU. And then in a worst case scenario, dividends dropping by 38% in the United States for the year. What would that do in terms of one of the most favored sectors in the stock market, which has been the income-producing stocks? I mean, how much more would they have to fall to meet that kind of forecast?
Well, it's a good question, and you can't just assume that's necessarily going to be the income-driven kind of areas of the market where you're going to be seeing dividends come down. I mean, just go right back to energy stocks, considering how much crude oil has fallen, how much companies' cash flow has fallen. Because of that, you have to wonder, how the dividends are going to fare going forward. You can say that all across a whole lot of companies that are being relatively affected by the coronavirus. Sure. When you look at today's trading, actually, it's the more defensive areas of the market that are holding up relatively well. So, utilities, real estate, the makers of consumer staples, food, beverage, tobacco, also healthcare. Right. A lot of those groups have relatively high dividends, too. So we'll see how those groups play out in terms of any declines from here.
Bloomberg Stocks editor Dave Wilson, thanks so much for that, giving us some color on this early market trading here. Ugly first half hour or so of trading, Lisa.
It's nothing. Ugly is limit down. We're not there yet. Bloomberg Markets is brought to you by Witham. For 45 years, Witham has been committed to helping businesses be in a position of strength. For guidance on business interruption, continuity issues, and remote workplace solutions, visit Witham.com. A key question will be the dollar. Will it continue to weaken versus peers? Right now, though, let's head down to Washington, D.C. Nathan Hager there with world and national headlines. Nathan.
Lisa, you mentioned work from home. home environments. The UK's Prime Minister now has to get used to one of those. Boris Johnson has the coronavirus. He confirmed his diagnosis on Twitter, saying he is now self-isolating at his Downing Street office.
I've developed mild symptoms of the coronavirus, that's to say a temperature and a persistent cough.
Johnson says he will still be able to lead his country's response through video conference, and the BBC is reporting British Health Secretary Matt Hancock also has COVID-19. Spain just recorded its deadliest day of the outbreak with another 769 deaths. Here in the U.S., the House is moving toward passage of that record $2.2 trillion stimulus later today. President Trump hopes to sign it as soon as today.
And then after that comes a very significant push, I'm told, by sources close to the Small Business Administration to educate the public on how to utilize the benefits that are in this $2 trillion package.
That's Bloomberg's Kevin Cirilli. First, though, the package needs to pass. House Speaker Nancy Pelosi had hoped to do that by voice vote, but Republican Thomas Massie of Kentucky is threatening a roll call, forcing members to return to Washington to cast their votes on the House floor. President Trump is responding on Twitter, calling Massie a third-rate grandstander, saying he should be thrown out of the Republican Party. Meantime, many hospitals are still waiting for life-saving equipment, and New York's Presbyterian has started ventilator sharing, as New York City alone now has 23,000 COVID-19 cases and 365 deaths. Global news on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
Have you ever thought, I wish I'd had that information sooner?
What does this tell us about the state of deal making?
Let's fix that.
One unprofitable company plus another doesn't make a profitable company.
Carol Mazur.
Talk to us about real-world applications.
Jason Kelly.
Remind us what the potential is for everyday folk.
Bloomberg Business Week.
Vice President of Exploratory Science is one of the cooler titles.
Weekday afternoons at 2 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg Business Week, now live on YouTube.
Not completing high school is more of a social thing than it was an academic thing. Even though all these years have passed, I still had that longing to have my diploma.
At age 30, Carissa finished her high school diploma.
If you're even considering getting your high school diploma, you can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
In-depth analysis, concise reporting, need-to-know global business news. Around the world and across the markets, Bloomberg connects the dots for decision makers. Stay on top of today's headlines. Follow big breakthroughs in tech. Understand the latest political issues. See how the world's wealthiest are spending their money. Track what's happening in the markets, and much more. Subscribe today to Bloomberg, the global standard for business reporting. Get it all at Bloomberg.com/subscriptions.
You know your body, and you know when something's off, when something doesn't feel quite right. Don't ignore symptoms like fatigue, joint pain, rashes, and fever. They could be signs of lupus. Listen to your body. Take care of yourself. We're here to help you take control of your health. Learn how at BeFierceTakeControl.org. Brought to you by the Lupus Foundation of America and the Centers for Disease Control and Prevention.
Coming soon, Ricochet, the new action film written by, directed, and starring Euro Millions winner Timothy Barker, with music by Timothy Barker.
Tonight's Euro Millions jackpot is a massive £22 million. That's dream come true money. Euro Millions from the National Lottery. Your numbers make amazing happen. Play online or on the app. Estimated jackpot. Rules and procedures apply. Players must be 16 or over.
The happy family of 3 were about to welcome a new member. That's right, they were finally getting a dog.
Buy on eBay, dog bed from £12.
First, they had to make a few adjustments.
Sell white rug.
And prepare the kids for the reality of owning a pet.
Buy biodegradable poop bags from under £6.
Everyone instantly fell in love with Little Rocky. Unfortunately, Little Rocky fell in love with a cushion. Buy, sell, eBay.
Delivery costs may apply.
The thing that I would say to anybody that was thinking about a job in social care is go for it. I'm Georgia. I love social care because you never know what each day will bring. It's emotional sometimes, highs and lows, but no 2 days are the same. I love the work, yeah. It makes me feel really good as a person. We make people smile every day.
If you want to make a difference to your life, care for someone else's, visit everydaysdifferent.com to find jobs in adult social care.
Hot, tasty, and ready in seconds. That's how most people like their coffee. I know because I used to have a coffee van outside London Bridge Station. Now I test coffee machines in the Which Test Lab. We find the machines that make the right amount of hot, tasty coffee time and time again. And the ones that perform best are the only ones we recommend for your home. Ah, perfect. Which.co.uk. Our tests find you the best.
Mayday, Mayday, this is Red Dwarf. Our engines are dead and we're being sucked into a black hole. Can anyone hear me? Over?
The only thing that's over is us, Crichton. We're finished.
Guys, relax. I've got Smart Breakdown with the AA. It sends them your vehicle's fault data, so they should know what's wrong before they even get here.
I don't believe it.
What, that they'll already know what's wrong?
No, that you're actually capable of something useful.
The future of breakdown today. The AA. Drive smart. See theaa.com for details.
Where will 2020 take you? Somewhere where people care about each other, about our planet, about creating a better world for everyone, and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Apply by the 31st of March for a chance to win your first year in halls. Visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
At Asda, you can put all your eggs in one basket. Get 3 Easter eggs for just £8, like a Cadbury Twirl, Caramel Freddo, or our Asda Free-From White Chocolate Egg. Easter egg faves without shelling out. Asda. Selected stores online, subject to availability. Eggs £3 each, 115 to 262 grams.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. The roller coaster ride on Wall Street continues big time this Friday. The Dow taking a dip of 856 points. That's a drop now of 3.8% dip, putting it mildly. S&P down 89, a decline there of 3.4%. NASDAQ down 265. That's a drop of 3.4%. We've got the 10-year up 29.30 seconds. The yield now 0.75%. Gold is down 0.7%, 16.19 the ounce. And West Texas Intermediate crude down 5%, 21.48 on WTI. A drop there of $1.12 a barrel. Brent 24.65, plunging by 6.4%. Bottom line here, stocks dropping as investors assess the pandemic's impact on the economy. Large areas of America virtually locked down to slow the spread of the virus. Treasuries climbing again, the 10-year, the yield there 0.75%. S&P 500 index opening lower after its fastest rally in 9 decades. Sentiment being hit by news that the U.S. has overtaken China for the most coronavirus cases worldwide. Recapping, equities slumping again with the S&P down 92 points now, a drop of 3.5%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. One of the areas that has certainly experienced a tremendous amount of volatility has been the currency market. The dollar surging to record levels recently, near-term record levels. That is recently, giving back a little bit here. That also creates a lot of currency translation issues for U.S. companies going forward. To get a sense of kind of how that might play out, we welcome Wolfgang Koester. He's a senior strategist at Kyriba. Wolfgang, thanks so much for joining us. Just give us some context of how the dollar's been trading, over the last several weeks of all this uncertainty.
Yes, I mean, definitely over this uncertainty, there's been a flight to quality and safety, and we're seeing strong but highly volatile dollar. But not only the dollar, which is certainly the trend of the strength there, but also seeing a lot of volatility between other currencies, such as the euro versus sterling, et cetera, et cetera. But certainly the dollar has continued to strengthen, quite frankly, almost in the face of or in reverse to the stock market.
One thing that you specialize in and have done such an incredible work in is understanding the flows and the hedging of dollars on the part of actual corporations. And this has been one big question of mine, which is how big are the imbalances when you've got foreign corporations borrowing money in dollars or not hedging out perhaps some of their dollar exposure? Can you give a sense of how much that's contributing to the dollar strength that we've been seeing?
Yeah, so what we're seeing is we've kind of seen two camps, if you wish, of corporations. Those that have been prepared and are ready to manage these currency risk in a fully automated fashion. They are very highly focused on managing their balance sheets right now, obviously, and protecting their balance sheets. And they're getting to levels of 95 to 99% hedge ratios. Therefore, they're fully protected. They are not going to be hurt at all. And this isn't just about the dollar, it's about many other currencies. As you well know, the average S&P 500 company does more than 50% of their business abroad, which means for the companies that do not have proper processes and automated process in place, we're actually seeing the average company of that sort to have a hedge ratio of roughly 65%. And that's going to hurt a lot of companies because as they're not protected, that's an issue. As you well know, when the United States dollar rises for corporations selling abroad, you all of a sudden getting less revenues to bring back into the United States.
Does that matter anymore? Because I remember there was a time when on earnings calls, CFOs would get on and blame the dollar, the strong dollar, for their weaker earnings. At this point, it seems like the earnings playbook has just basically been kicked out of the window. So it doesn't necessarily even matter some of these traditional metrics, or do they?
Yeah, they actually do, because these are the times when investors and analysts are looking who's handling this best, who is prepared, who's running a sound company, and the analysts are looking for these type of signs, which are sometimes difficult to find, but the foreign exchange is actually one of the easiest ones to find because there's obviously a line item on the income statement that highlights the impacts of foreign exchange, certainly to the balance sheet. So what analysts are looking at is saying, how good are these corporations at managing their financial risk? And the foreign exchange is actually the biggest indicator that most people are looking at. So it is really important, remains important. Now, to your point, companies, what we are seeing is companies are truly protecting their monetary assets and liabilities right now, and that's mostly the balance sheet. What they're not doing as much on is hedging the forecast, outlooking forecast 12 to 18 months, because they're quite unpredictable right now. So they're actually laying off, not doing as much on the forecasting side from a currency point of view. What they are focused on very much, as you know, we don't only just look at the currency parts, we also look at liquidity and help lots of companies around the world manage that liquidity. And there's a tremendous need right now to have absolute visibility to the cash and to be able to at least forecast the next 3 to 6 months.
So, Wolfgang, and based upon your work, are there any sectors that you think are most exposed here against that surging dollar that we've experienced recently?
It's actually been really interesting, and we've been studying this now for about 9 years through a quarterly report that we put out. And this is pretty industry agnostic, surprisingly enough. It's really for investors to look at how exposed are corporations, and are they getting more revenues or spending more expenses abroad? If they're having more expenses abroad, then this will be good for them if they weren't hedging and if they're speculating in this, quite frankly. But overall, it's really important to look at it that way.
Wolfgang Koester, thank you so much for being with us. Wolfgang Koester, joining us to talk all things currencies. Really interesting to me, Paul, to see some of the sort of cross-currency effects that go beyond just sort of the liquidity disruptions, but the fundamentals of a lot of balance sheets.
Yeah, exactly. And we're going to see that, at least in the upcoming couple of quarters here, as we've seen these big moves in currencies. But I think you raise a good point, Lisa. It might be kind of beyond the point here. It's going to be, I think investors clearly are going to be focusing on any kind of guidance that these companies can give as to the next couple of quarters, and just in terms of the top line revenue.
Yeah, just want to bring you this breaking news. It sort of highlights the pain that's being felt in the mortgage market in particular. Angel Oak, which is a mortgage lender, cut 70% of its staff amid the credit tumult that is ongoing, as we saw a whole host of fire sales due to outflows and margin calls. And yes, the government, the Federal Reserve, is trying to sort of stave that off or ameliorate some of that stress, but it appears that it is ongoing and it is leading to layoffs in that sector. Meanwhile, we are seeing the sell-off deepen with the Dow down more than 4%. Coming up, more of a conversation on what to expect from the Congress stimulus. This is Bloomberg.
This is Bloomberg Money Minute. Stocks plunging with the U.S. topping China for the most confirmed coronavirus cases. Meantime, the stimulus package set to be swiftly passed in the House. It will then head to President Trump's desk for his signature. American Airlines said it is in line to get $12 billion from that giant rescue package. American is canceling 60% of its flights for April, 80% for May. Carriers are bracing for sales to drop by $250 billion this year. General Motors is moving to cut costs. The automaker is freezing work on new vehicle programs, and it's deferring pay for white-collar staff. Plus, GM senior management will take pay cuts. And Conagra said it will provide cash bonuses to employees at each of the company's production and distribution facilities in the U.S., Canada, and Mexico. At the company's more than 50 facilities, full-time employees will receive $500. Part-time employees will receive $250. Courtney Donahoe, Bloomberg Radio.
The possibility of lung cancer can be pretty scary, especially if you're one of approximately 8 million current or former smokers at high risk. That's why SaveByTheScan.org wants you to know that now there's a breakthrough low-dose CT scan that can detect lung cancer early, and it only takes 60 seconds. You stop smoking, now start screening. For an easy quiz to see if you're eligible,